Alright everyone, thanks for joining me for another video. So Bitcoin just hit 100k for the first time. And in this video I just want to go over how we got to the 100k mark at Bitcoin. And we're also going to look at what the future holds for Bitcoin, some of the potential bottlenecks that poses a threat to Bitcoin along the way. And I'm also going to head over to the chart so that I can give you a technical analysis of the price action on Bitcoin. So right now I'm at coin market cap, and as you can see that right now the total market cap for the entire crypto market is at 3.823 trillion with a 24-hour volume of about 286.9 billion. But Bitcoin holds a majority of the market cap with over 54% market cap dominance, followed by Ethereum at 12.1%. So we're just going to go over to Bitcoin. So we can see here that Bitcoin has a market cap of around $2 trillion with a 24-hour trading volume of about $90 billion of Bitcoin being transacted within the last 24 hours. And we have a circulating supply of around 19,797,740,000. Now this is very important because, as you can see, the total supply of Bitcoin is at 21 million. So we have very few Bitcoin left to be mined, and so this is one of the value propositions of Bitcoin, and it will play an important role in the Bitcoin ecosystem going forward because the amount of Bitcoin being produced and being mined is constantly reducing, and this causes a lot of pressure on the price of Bitcoin because we are constantly getting more demand, especially from institutional investors who are now buying a lot of Bitcoin. And so right now I'm just going to go over and see some of the factors that have actually contributed to the bullish phase of the market, especially this last year. So we can see that one of the main factors driving the current bullish cycle of the market, especially this year, was the approval of Bitcoin ETFs in January. This was something that the market was really looking forward to for a long period of time, and the SEC was just basically denying Bitcoin spot ETFs for a very long time. But at the start of this year, we had the Bitcoin ETFs being approved. With the Bitcoin ETFs, it just basically allows institutional investors to have exposure to Bitcoin without owning the actual Bitcoin and having to set up wallets and all these other things that come with holding Bitcoin and other cryptocurrencies. So it makes it is very easy for institutional investors to actually invest in the market. And this has led to billions and billions of dollars flowing into the market, especially into the Bitcoin market, because we do have many cryptocurrencies, but these ETFs are just for Bitcoin. And as you can see, we've had different companies such as BlackRock, Fidelity, Grayscale, all attempting to create Bitcoin ETFs. And right now we have so many Bitcoin ETFs and a lot of capital inflow from institutional investors into the market. So this has really affected the price of Bitcoin because it has led to increased demand. And on the other hand, we did have Bitcoin halving this year, which was around May. So with the Bitcoin halving, we had a reduction in the amount of Bitcoin being produced. And when you combine this with the increased inflows from institutional investors, it creates a lot of demand. And at the same time, we get a reduction in the amount of Bitcoin being produced. So when you look at when you combine these two factors together, you can see that we do get a lot of pressure on the Bitcoin price. And this is why we've had a run towards 100k and even beyond. And so these are just some of the factors that have really contributed in the Bitcoin price going to 100k, because it's important for you to have at least an understanding of what is driving price. And at the same time, we also had the US election, and President Trump, who has been pro Bitcoin and pro cryptocurrency, won, and this has led a lot of speculation, which has also contributed to the price of Bitcoin breaking 100k. And right now we're just going to go over to the charts so that we can see all these factors playing out in the market. So this is the BTC USD chart. So let's just look at, this was the start of the year, Jan 2024, right here. So you can see when we had the approval of Bitcoin ETFs, which was on Jan 10th. So from this point, we had the start of the bullish cycle for the year. So with that, we had price going from 41k, and now we're all the way to 108k. And at the same time, this region here where we got some sort of a correction is where we had the Bitcoin halving taking place. So we had the initial push from January with the Bitcoin ETFs. Then we had some sort of a correction when we had the Bitcoin halving. Then you can see that once we had the Bitcoin halving, price continued to push higher. So these fundamental factors, you can see them playing out in the market. This is a weekly chart on BTC USD. And as you can see, the Bitcoin halving and the Bitcoin ETFs approvals really did have an impact in the price of Bitcoin, taking Bitcoin from 38,800 all the way to 106,000 or 107,272 there, which was the top. Now we are just going to look at the overall price development of Bitcoin since 2015, so that we can get technical, so that I can give you at least some technical analysis of what I expect to happen in the market. It might not necessarily happen this way, but the current sentiment is in the market right now from most crypto influencers is that you need to buy because 2025 is going to be an amazing year. You're going to make 100x returns. You're going to make millions of dollars. But the charts tell a very different story. So right now, let's just go over to the charts so that we can have an idea of what we might expect. Because for me, the charts tell the real story. You are going to get all sorts of narratives out here, especially when the market is hitting all-time highs. But when you look at the charts, you can make a more informed decision. So let's just go over to 2015 so that you can get to see how the different bullish and bearish cycles of the market play out. Because although we are in a bullish phase of the market right now, crypto winter is coming, that's for sure. And let's just go over to the chart right now so that I can explain that to you. So you can see that from 2015, let's say Jan 2015, that's when we had the bottom of the market at around 101.73. And from Jan 2015 all the way to 11th December 2017, which was a period of 2 years, we had a bullish cycle with price going from 111.7 to 19,262. So the important thing here I want you to note is the amount of time it took to go from the bottom of the cycle to the top of the cycle, which is 2 years. Now at the top of the cycle, which was at around 25,000, and we did get the top of the cycle at 11th December 2017. So it's important to remember that 11th December. Right now we are at the 18th of December. So after we got the bullish cycle, we did get the start of the bearish cycle of the market, which basically started around 25th December, or let's just say 1st January. So you can see that on the 1st of January, we were at $17,352.45 per Bitcoin. And we went all the way down from at the top at 22,248 all the way to the bottom at 3,148, which was on the 10th of December 2018. So the bearish cycle lasted for around 1 year, and we're just going to look at the difference, the percentage drop from the top to the bottom. So I'm just going to have this tool draw. So at the top from 20,045 to 3,147, we had a 84.3% drop in price of Bitcoin. So it's important to be aware of this because you might end up buying at the top, and this will put you in a drawdown for a period of 1 year, and you'll end up losing about 84% of your capital invested. Now, if you are not planning to buy and hold for a long time, you definitely will sell within this shake-up period and you'll end up making a loss. But for those who managed to hold their positions, they did end up making profits as price did break outside of the 20,000 range. But you're just going to look at that. So the bottom of that bearish cycle was on December 18th, and at and we did get the start of the new cycle, the bullish cycle, with this candle on the maybe 17th of December. So let's look at 1st January. So the first week of January we were at around 3,151, and this is when we can consider the start of the next bullish cycle, because we had this push to the upside, then we got the correction, then we had continuation to the top of the cycle, which was at 65,700, which was at around 65,000. So let's look at how long it took us to go from the bottom of the cycle to the top of the cycle. So from around the 24th of December 2018. So let's just look at the next week, which was the first week of Jan 2019. At the top of the cycle was at so we did get the top at 5th April 2021, but the markets continued to push high after the initial push. So the end of the cycle was basically the 8th of November. So once again, you can see that this entire bullish cycle took around 2 years for us to hit the top. And then after hitting the top, we started the next bearish cycle. So we went from 69,682 at the top, which was around 8th November, to the bottom, which was 15,000, around 15,000 on the 21st of November 2022. So you can see that from the top to the bottom, this took around 1 year, which is the same as this bearish cycle, as the first bearish cycle over here, which took 1 year. So the next bearish cycle has also taken 1 year. So from the low, which was on around the 21st of November 2022, we did get the start of the next bullish cycle, which started in Jan. Let's just look around here. Yes, Jan 2023. So we had the first push, we had the first correction, second push, correction, and now we have had probably the last phase of the trending market, because so from the 1st of Jan till date is now about 2 years. So we are getting that repetitive cycle where we have 2 years of a bullish cycle, 1 year of a negative cycle, 2 years of a bullish cycle, 1 year of a negative cycle. So I did forget to just look at the percentage drop in Bitcoin price this last bearish cycle. So let's just pull that out. So from the top of that cycle to the bottom, we had a 77.22% drop in the price of Bitcoin. You can see that there are certain patterns that repeat themselves, and this is what we look at for in technical analysis. We are now looking for this same pattern to repeat itself, and so this begs a lot of questions when it comes to whether or not you should buy Bitcoin right now, and whether the market will continue to push higher. Now, for me, in the long term, I'm Bitcoin bullish, because you can see that price has been pushing higher and higher. This chart is from 2015, but Bitcoin did get released in 2010. And if you look at the chart from 2010, it's just the same cycle. 2 years of a bullish cycle, 1 year of a bearish cycle, with a drop off of around 84, with a drop of around 80% every time. So with this in mind, we are now going to try and look at what to expect. Now we have broken above the 100k psychological level. So we do not have um, a support level that we can look at on the left of the chart to say, to try and anticipate what's going to happen when once price reaches that level. But based on the cycles that we've had on the Bitcoin market from 2010 all the way to 2024, my expectation is that we've had the 2 year bullish cycle. Now, for me, I'll be looking to see if we can get uh, the next bearish cycle to start. So we've seen from the chart that uh, the bullish cycle has been ending basically around November, December. In 2021, it ended in around November, 8th of November. In 2017, the bullish cycle ended in 11th December. So based on historical data, in the short term, I'm not expecting Bitcoin to continue pushing higher and higher. I would expect us to get the bearish cycle, and this will last for maybe a year or so. If you look at historical data, we do get around a 77% or an 80% drop in the price of Bitcoin. So depending on what the top will be, let's say, let's assume that this just happens to be the top of the market cycle. So I would expect a 70% drop in price. So let's say from 108, or let's say 80% drop, or let's say 75% drop. So I would expect the bearish cycle to last for a year, and I will expect us to get to around 26,870 level over there as the bottom of the cycle. But anything can happen in the Bitcoin market and in the crypto market. I know that, so most people right now are expecting Bitcoin to go to all the way to $1 million. And even though that might happen in the future, it's not going to go from 100K to $1 million in this cycle. That is very unlikely to happen. So right now I'm just going to go over some of the potential bottlenecks that the Bitcoin network might face over the future. And I'm going to start with quantum computing, because quantum computing to me right now seems like the biggest threat to the Bitcoin network, although it does not pose immediate concerns. But when you look at the entire Bitcoin network, the way it was set up, the quantum computers that are being developed right now pose a threat to the security of the Bitcoin network, because with the Bitcoin network right now, basically how you get to mine Bitcoin is through a system whereby you use computing power to solve certain equations that allow you to verify transactions on the Bitcoin network, and other results of that you get rewarded through Bitcoin. Now, the amount of computing power needed to solve these mathematical equations is really, really high, and it consumes a lot of energy. You need to have high computing power to be able to participate in the Bitcoin mining ecosystem. But with quantum computers, it poses a threat, because quantum computing will make it possible to solve these equations at a very fast rate. And this will lead to a and this might pose a threat to the entire security of the Bitcoin network. I'm just going to look at this tweet from Chamath. So basically, Chamath talked about this on the All In podcast. Starts by saying that quantum computing will be a risk to version 1 cryptographic approaches. The time frame is very much not clear, and it's not in the immediate time horizon. But if I owned a lot of Bitcoin, my risk posture will be to assume it could happen and plan accordingly. Now he goes on to just talk about how the risk will be addressed. But something that is very important is that when Satoshi was actually setting up the Bitcoin network, he did actually anticipate such a problem. So he did basically state that SHA-256 is very strong. It's not like the incremental step from MD5 to SHA-1. It can last several decades unless there's some massive breakthrough attack. If SHA-256 became completely broken, I think we could come to some agreement about what the honest blockchain was before the trouble started. Log that in and continue from there with a new hash function. If the hash breakdown came gradually, and this is we could transition to a new hash in an orderly way. The software will be programmed to start using a new hash after a certain block. Everyone will have to upgrade by that time. The software could save the new hash of all the old blocks to make sure a different block with the same old hash can't be used. So I think that with the current state of quantum computing, we are at this stage where we can get to do this gradually. And as you can see, this is something that can be addressed. The threat of quantum computing can be addressed. But I can assure you that once we get into the bear market cycle, you will be seeing more of this news being thrown around, and it will be some of the catalysts that will be driving price down. With that said, we can see that quantum computing does pose a threat, but it's something that can be addressed. So the other factor that might pose a threat to the Bitcoin network is the concentration of Bitcoin mining in one area. Right now, Bitcoin mining is concentrated mainly in the US, with about 30 something percent of total Bitcoin mining happening in the US. So you can see, according to a report released by Cambridge Center for Alternative in October, the US accounted for 35.4% of Bitcoin's global computing power or hash rate at the end of August. Now, this is a little bit concerning because the main aim of Bitcoin was for it to be decentralized. But when you have a lot of concentration of Bitcoin happening in just one country or in one area of the world, this poses a threat because, as we saw in 2019, China banned Bitcoin mining, and at the time, 75.53% of the total Bitcoin mining was happening in China. This had an effect on the price of Bitcoin, and also because all these mining operations had to be uprooted from China and moved to other parts of the world. So the concentration of Bitcoin mining in one area is not really conducive for the Bitcoin network, which thrives on decentralization. Because although right now the US is pro crypto, especially with President Trump, what would have happened if Kamala Harris had won the election? That is something that we always have to consider, because if the government decides to crack down on Bitcoin mining in the US, this could pose a threat, as the Bitcoin miners will have to find another home for their Bitcoin operations. So these are things that are not a serious threat, but are just food for thought. And it's important for the Bitcoin network that the mining system, the mining operations are decentralized in different parts of the world. So right now that we have gone through the potential bottlenecks facing the Bitcoin network, let's now look at what you can do as an investor to get exposure to Bitcoin and how you can invest in the Bitcoin market. Now, this is not financial advice. You'll have to do your own research or seek the help of a financial consultant before you decide to buy crypto or Bitcoin. So when I look at this chart and the cycle that we've had over the years, I would say that if you are looking to buy Bitcoin and you're not a sophisticated investor, you cannot time the market and look for and attempt to buy at the bottom every time. You could try to use this approach where once you get the top of the market and you get the start of the bearish cycle, you wait for a year and wait for a price to drop by around 70% for you to start buying. But the ideal scenario for anyone who's not a sophisticated investor would be to dollar cost average into Bitcoin. So by dollar cost averaging, you'll end up buying the top and the bottom through different cycles. And in the long run, you'll end up having an average entry price that will give you a profit at the end of, let's say, 5-10 years. So this will be the best approach to take as someone who's not a sophisticated investor. And if you are going to buy Bitcoin, then you need to limit your exposure. Once you decide that you want to buy and you want to buy through the dollar cost averaging system, the next step is to decide how much capital you are going to risk, because risk management is very important, as with Bitcoin anything can happen. Although I'm bullish long term in Bitcoin, anything can happen, and you cannot rule out the possibility that Bitcoin can go to zero. Like, it's a very, very small possibility, but it's still a possibility. So with that in mind, you have to risk your capital appropriately for you to be able to invest in Bitcoin in the long term without having to worry about the price. Then just invest around 1% of your savings, so that in case Bitcoin does drop to zero or just has a very huge dip, it's not going to put psychological pressure or monetary pressure on you, because you're just risking 1%. If you have $100,000 and you've just risked $1,000, if you lose that $1,000, it's not going to make a big difference in your life. So that's the mentality you need to have, and that's the best approach to have when investing in Bitcoin. Invest only money that you can afford to lose. Do not go and invest all your money, all your savings in Bitcoin, because once price starts to drop and you've invested all your savings in Bitcoin, the psychological pressure you're going to get is unimaginable. So be smart and only risk 1 to 2% of your capital. If you want to push it as a retail investor, you can push it to 5%, but don't risk more than 5% of your capital in Bitcoin. Ideally, just risk 1 to 2%. So with that said, that's my outlook for the Bitcoin market. In the long term, I'm expecting Bitcoin to continue pushing higher. I'm not going to put a number to it. If you can get 1 million, possibly even more than 1 million, but that is something that is going to take 10 to 20 years. In the short term, I'm expecting the bearish cycle to start anytime right now, because we are right now at the 18th of December. So if you are thinking about buying Bitcoin right now or investing in the crypto market, I hope that this video gives you a different outlook to what most crypto influencers are pushing right now, and so that when you do decide to invest your money, you know what you're getting yourself into. So with that said, I hope you found a ton of value in this video, and make sure to subscribe and like, and I hope to see you in the next one.